These days, AI can help you adopt better time management, but it can't stop colleagues booking meetings during lunch. But how about being able to easily adopt industrial AI to streamline your business? Siemens Accelerator helps you find the right AI providers and easily understand what they offer, so you can use modular solutions to quickly scale up and grow your business. That's AI for real, from the global market leader in industrial AI, Siemens. Learn more on usa.siemens.com/AI.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want with PayPal, Venmo, Pay Later, and all major cards, so you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
For enterprise organizations, managing all your food needs is a tall order. But with EasyCater, you get a single workplace food vendor with the tools and resources to make it easy, giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. All while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
We've got Meta Platforms, Microsoft, both out with earnings. Those are the big ones. There's a lot that are out there, but we want to get to it. We've got great team coverage here at Bloomberg and also some great outside voices. So let's get to it with Dan Ives. He's Managing Director and Senior Equity Analyst and Global Head of Technology Research at Wedbush Securities. We're going to start with Meta. Let's talk about it. The stock's up about 8.5% here in the aftermarket. What do you like and what don't you like? Do you not like anything?
There's nothing not to like. I mean, look, it speaks to, you go through this AI revolution. It's in this next stage of growth. And all the money that you're seeing these big tech players, CapEx, now you're ultimately starting to see some of those dividends get paid. And then you think about the advertising growth, similar to what we saw with Alphabet, what you see with Meta, subscriber growth. I mean, it's Goldilocks, for tech.
How does Meta harness AI to make money apart from making its advertising more efficient?
It's about the billions of users. It's about going forward, how they're going to monetize AI. They're not just spending to spend. They're going to be able to monetize from an advertising perspective when you think about the billions of users they have.
How do they do that, though, Dan?
And the reason Zuckerberg right now is what I view as like a wartime CEO. It's the view that when you think about AI today, this is just the beginning. You're gonna have AI-driven search. You're gonna have sort of the future that Meta, Alphabet are gonna play huge pieces in the advertising piece.
But I want to go, so it's just advertising that's where they're going to make all their money back. We know that they have been on such an aggressive AI talent grab, and Meta has. So
hundreds of millions of dollars.
Yeah, like pay
individuals.
Yeah, so that's all going to pay off. Their return on investment.
That's just the beginning.
Okay.
Advertising just the beginning. When you think about what I view as sort of like full AGI. And it was like the holy grail, what Meta is trying to build, what every big tech player is trying to build. Meta is basically looking to create a whole nother company over the next decade. That's what they're spending on.
This is what I'm still waiting for. Meta Platforms, look, no question this was an incredible quarter. The stock is up 9.3% in the after hours. Just to repeat the numbers, second quarter earnings per share, a huge beat, $7.14. The estimate was for $5.89. Second quarter revenue, a huge beat, $47.5 billion. The estimate was for $44.8 billion. Third quarter revenue, $47.5 to $50.5 billion. That's the outlook. The estimate was for below that at $46.2 billion. But I want to look with you years out when the hardware that they're working on, that they're spending billions of dollars on, will start paying dividends. What does that future look like for Meta users and for Meta investors?
And you have to think about it like, what's the future in terms of robotics, in terms of software, in terms of how AI is going to play a role in the everyday of a consumer? I mean, Meta's thinking not in the next year, 3, 5, 8, 10 years out.
I want to bring in Mandeep Singh, if I may, of our Bloomberg Intelligence team. I don't know if it's too soon. I know you're going through all the numbers because I want to bring you into the conversation with Dan. Good quarter, killer quarter. How do you see it for Meta?
Yeah, I mean, there is a sequential acceleration in ad impressions as well as ad pricing growth. And to my mind, that is a sign of them applying AI to boost engagement. Obviously, the user growth has been almost the same every quarter, 4 to 5%. So the fact that impressions grew 11% is a sign that people are spending more time on their family of apps. And then the ad pricing going up 9%. That to me is the real tailwind, because that was the risky part. Chinese advertisers like Temu and Shein pulling back because of the de minimis rule changes. That didn't happen. That didn't show up in the numbers. And look, when it comes to applying AI, I mean, small advertisers are now connecting Meta to their CRM systems. And actually, that is what's driving the ad targeting and efficiency. That wasn't the case before. That has been enabled by Gen AI. So that's why you see that lift.
So you agree with Dan?
I think Gen AI use case is quite prominent. We keep hearing about coding agents, customer service. Here is the precise use case for Meta. Yeah. And that is what they are showing in their ad pricing numbers.
Dan, come on in. I saw you're saying something.
That sounds like a bullish Mandeep. I mean, for that's like on the Mandeep scale. That's pretty bullish.
I like that. Hey, Dan, I noticed something striking today when I opened up Instagram. I was searching for a video from Mike Birbiglia, a comedian who I really like. And what I noticed when I was just looking for his profile, when I typed in his name, what appeared was as an AI answer about a biography of who he was, information about him. Is the goal? What is the vision for Instagram? Is this going to be Meta's super app?
I mean, to some extent, they're basically creating a super app. I mean, similar to what you see in China, but an AI-driven super app. And you start to go through that, you're looking at a 4-digit stock.
They tried to do this years ago with David Marcus on the Messenger side, Mandeep. It didn't necessarily work. It was supposed to be payments and everything. Is that still, in your view, an area of growth for the company here? Or is that strategy gone?
I mean, right now, it feels like they have a lot of runway with ads. And there is a clear use case for Gen AI with ads. I mean, they still have to fix the model. So I think the advantage that they have is really they are the best when it comes to ad targeting. And with everything that's going on, I mean, they have the surface area to apply Gen AI. But look, when it comes to payments and other areas, they still lack the diversification of a Microsoft or a Google. Well, it's still a one-trick, albeit a $200 billion company, but still dependent on ads.
Dan, it's funny because I was thinking about that because we talk about all of these companies, and I think about the hyperscalers like an Alphabet. We've talked about that a lot, Mandeep, about just all of their different platforms and how much data that gives them to make their models smarter and smarter. I mean, Dan, is it going to be okay for Meta to be kind of a one-trick pony, even if it's a massive one-trick pony, but is it enough?
Well, I mean, look, I think if you think about it on a pecking scale, of course, NVIDIA at the top, Microsoft, and you look at these numbers, just unbelievable in terms of across the board. You look at Meta, you call it one-trick pony-ish, but they're going to significantly expand that over the coming years.
I mean, at least for now, there is no proof. I feel they are under-earning by 20% because of all the losses in Reality Labs, but the street doesn't care because their ad business is really going gangbusters. when the ads slow down and the comps will get tougher, and there will be a point when ads will not grow 20%, that's when I think the question will be asked, why are they losing $20 billion on Reality Labs? Because it's not making any money.
When will it start making money, Dan?
And does it matter?
I mean, look, it's going to be a while, but like the whole point is right now that's background noise. Like, in other words, like Street wants them to continue to invest, build this further out. And at the end of the day, that is going to come into the fold. But you're not right now in this arms race in big tech. You are laser focused on who's going to be the winner. And that's what we're seeing from Microsoft to Alphabet to Meta, obviously, across the board, and we'll see it with Amazon as well. Like, it's an arms race.
I mean, the one other data point I would want to bring in is token count. So Google and Microsoft have shared the Gen AI consumption, the token count. We don't know how much Meta's models are being used. Yes, their ad targeting is great, which is why ad pricing was such a solid number this quarter. But at the end of the day, if you're investing $70 billion in CapEx, you want to see your model being used and the open source strategy work. We have no proof points of that. So I still believe they have the most uphill task in terms of showing ROI on the the CapEx besides their family of apps, and that's still the case.
Dan, I know you got to go, but 30 seconds, last question for you. What's the one question you'd ask Mark Zuckerberg tonight?
Look, I think it's really about CapEx trajectory, because I think that's just, even though that will slow a bit, they're putting, as they continue to spend, you know what that shows? Confidence. And that's what you saw in Alphabet. That's what you've seen in Microsoft. And that means it continues to be like this is the AI revolution, this is the AI party. It's 10 p.m., it was 9 p.m. Party goes to 4 a.m.
Hey, listen, before you go, I know we said last question, but not that we lie, but you're here and you're Dan Ives. Microsoft, you said that was also a big killer report. I mean, the stock was just crazy in the aftermarket. It's up about 6.8%.
Scotty Scheffler-like results, right? I mean, the point is like massive beat on cloud. You see more and more of these use cases, these hyperscalers, those are the best indicators. That just shows where the next spending in AI is going. And that's why right now, if you're a tech bear, you're in hibernation mode in that cave and you can't find AI in the spreadsheet.
Pretty crazy. Pretty interesting. Hey, listen, we know you're busy. We know you're bouncing around and got stuff to do, but always good to get some time with you. Dan Ives, Managing Director and Senior Equity Analyst over at Wedbush Securities, also Global Head of Technology Research.
I just want to remind everybody where we've come in the last few years with Meta Platforms. There was a lot of talk in late 2022 of leaving this company for dead when they made their pivot to the metaverse. Shares were trading at $88. Now
Go back to the IPO.
Oh,
sorry.
Yeah, I mean even a recent history.
Right.
It's up 686% since then. That doesn't include the surge in the after hours, which, if it holds, will be a new record for Meta Platforms tomorrow.
Yeah, and look, when people were, selling the stock at $80, then they didn't really factor in, Meta's engagement. So what's really brought them back in such a big way is people are still spending over an hour and a half across their family of apps. So that sort of engage, and look, that's where the real risk comes in. So ChatGPT now is about 30 minutes across its daily active users, which is much smaller than Meta. Meta has over 3 billion, and ChatGPT is still, less than 400 or 500 million. So still much small, but they are taking share in terms of engagement time. People are spending 30 minutes on ChatGPT. So as long as Meta keeps growing engagement, I think they will keep growing earnings, and that's what they're showing with their ad revenue.
All hails Mandeep. Mandeep Singh, of course, with our Bloomberg Intelligence team. He is Bloomberg Intelligence Global Head of Technology Research. Be sure to check out his research on the Bloomberg when it comes to Meta. So appreciate it. Meta shares, by the way, are up about 11% here in the aftermarket. The company giving a stronger than expected third quarter revenue forecast, a sign that core ad business is still growing quickly enough to support aggressive spending on AI. Devil in the details, and we heard that certainly from Mandeep. And then we've also got Microsoft. That stock is up here in the aftermarket, and that one, some really, really strong numbers as well. Quarterly quarterly cloud sales profit exceeding expectations. They say they brought in more than $75 billion in the past year in terms of its cloud business as the company continues to commercialize AI services, Tim.
We got a great group of folks, a great duo to talk Microsoft and more. I want to bring in Greg Halter, Director of Research at the registered investment advisor, Carnegie Investment Counsel. They've got about $6.5 billion in assets under management. Also want to bring in Bloomberg Intelligence senior tech analyst, Anurag Rana. He joins us from our Chicago bureau. Greg, just for some context, Microsoft is the largest holding. Is it a largest individual holding for your group, or is it because it's in index funds? I just want to set the stage before we get into the details.
Thank you, Tim, and thanks for having me. We do not count the index fund holding positions in that number. If you look at our latest 13F filing, Microsoft is the largest individual stock holding at Carnegie.
All right, so Microsoft, investors certainly like it in the aftermarket. As we mentioned, Greg, the stock is definitely soaring up about 8% now as I speak. What jumps out at you?
I think the Azure growth, 39% versus the 34% expected, that is huge. I'll also point out that their EPS beat of 8% plus is the best in 7 quarters. Usually they do beat. I think it's been now only 4 times over the last 45 periods they have missed on earnings. And this is a larger point of exceeding the estimate that they've had in 7 periods.
All right, I want to bring it. You like it. All right. Anurag Rana, I want to bring you in here. I'm not sure. I think we all went into this week with a little trepidation over everything that was coming at investors, including some of these big tech earnings. But this, certainly investors like what they got from the company, and certainly with the outlook. What's your take here? What's important for investors to learn off of this release?
I would echo what our other guest said. I mean, the acceleration in Azure is pretty impressive. And one of the things I think it's going to do, it's going to tell people that all the CapEx Microsoft is spending, they're getting the benefit of it on the other side of it. And they're probably the first one to recognize a bigger, load of AI revenue coming in. And, this will pacify a lot of people out there that may be worried that why are these companies spending so much on AI infrastructure, and where is the, other side of the equation. So I think it's a good result, not just for Microsoft, but the entire tech platform.
Well, and that's what I want to just follow, Anurag. Our preview of all of this was Microsoft Meta investors are going to be scrutinizing over the AI spending binge. So for Microsoft, clearly we are clearly seeing the ROI when it comes to that AI spend.
Yeah, both on the top side and, they are doing extremely well on the expense management side, because what happens is when you're seeing a rapid growth in Azure, which has a relatively lower gross margin than the rest of the Microsoft business, profitability does get dented in addition to all the AI investments that they're making. What they did this time was, year over year, they kept their headcount flat. I mean, that's a huge boost to, you could say, profitability as well as productivity. And, I think that's something for people to take home also.
Hey, Greg, I want to bring you back in here. Looking at the Azure growth here, the company reported better than expected growth in its cloud business. The Microsoft saying it brought in more than $75 billion in the past year. The company continues to commercialize AI services. Give us your bull case on AI and Microsoft, because essentially this company is deploying AI tools and it's betting that these conversant chatbots and more powerful automation tools are going to boost sales of Microsoft's productivity software and cloud services. Is that bet paying off right now?
I don't know that you can say it's 100% paying off. The reaction to the stock indicates that investors believe that it will. This stock was coming into the report at 34 times earnings, so a lot has to go right, and it appears that a lot is going right. So yes, we've done a look at their CapEx and R&D over the last 10, 12 years or so. It's not like this is new. It's just that the numbers are big. I mean, the percentages are also fairly large, but they're spending billions and billions on R&D. Of course, now they can get the tax benefits from that. Billions of dollars, not just Microsoft, but others. And you would hope that they're wisely investing in that R&D for future profitable products and services.
Hey, I do want to point out, too, that we see Amazon shares up about 2.7% here in the aftermarket. Shares of Alphabet are down about 0.4%. But, of course, Amazon reporting along with Apple tomorrow. Anurag, I don't know. Is there any cause for concerns or things that you want to question or would question with the C-suite following Microsoft's release here?
I think I would talk about the headcount growth for next year. What are they baking? Because it's been almost 2 years where they have added very little headcount to the overall, company size. And the big question over there is this something that we should anticipate going forward? That you're getting all this cloud revenue, but you're not adding a lot more headcount. Because I think that's slightly concerning. Not so much for Microsoft, but the rest of the tech industry. Because somebody that is selling HR software or sales software depends on companies hiring quite a bit because it's a seat-based model. And I think that's an area, but that's not so much, I would say, Microsoft's problem, but that the rest of the tech industry's issue.
All right, going to leave it there. Folks, thank you so much. Anurag Rana, Senior Tech Analyst with Bloomberg Intelligence out there in Chicago, and Greg Halter, our thanks to you as well, Director of Research at the Registered Investment Advisor, Carnegie Investment, with the latest on Microsoft and Meta.
These days, AI can help you adopt better time management, but it can't stop colleagues booking meetings during lunch. But how about being able to easily adopt industrial AI to streamline your business? Siemens Accelerator helps you find the right AI providers and easily understand what they offer, so you can use modular solutions to quickly scale up and grow your business. That's AI for real, from the global market leader in industrial AI, Siemens. Learn more on usa.siemens.com/AI.
For enterprise organizations, managing all your food needs is a tall order. But with EasyCater, you get a single workplace food vendor with the tools and resources to make it easy, giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. All while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Come on, why is this taking so long? This thing is ancient.
Still using yesterday's tech? Upgrade to the ThinkPad X1 Carbon. Ultra-light, ultra-powerful, and built for serious productivity with Intel Core Ultra processors, blazing speed, and AI-powered performance that keeps up with your business, not the other way around.
Whoa, this thing moves.
Stop hitting snooze on new tech. Win the tech search at Lenovo.com. Lenovo. Unlock AI experiences with the ThinkPad X1 Carbon, powered by Intel Core Ultra processors, so you can work, create, and boost productivity all on one device.